Hello, everyone, and welcome back to the Financial Podcast. Today, we're diving deep into one of the most significant events in the financial world, especially within the cryptocurrency space, the long-awaited initial public offering of Circle Internet Group. Circle, the innovative force behind the widely used USDC stablecoin, has successfully made its debut on the New York Stock Exchange under the ticker symbol CRCL, marking a pivotal moment for digital finance. This IPO was a truly remarkable event, demonstrating an extraordinary level of investor confidence and demand. Circle and its shareholders ultimately raised $1.05 billion, with the shares pricing at an impressive $31 each, well above their initially anticipated range. The journey to this final pricing involved multiple upward revisions, a clear indication of overwhelming interest from the market. Originally, Circle had planned to raise $600 million by offering 24 million shares at a price range of $24 to $26. However, this was quickly upsized, first to 32 million shares at $27 to $28, and then finally settling on 34 million shares at $31. This robust demand, reportedly exceeding the available shares by over 25 times, underscores the strong appetite for well-regulated and transparent entities within the digital asset sector. The company also offered its underwriters a 30-day option to purchase an additional 5.1 million shares, further highlighting the deal's flexibility and potential for expanded public participation. This successful public offering carries substantial weight for Circle, especially given its prior attempts to go public. The company had a previously canceled SPAC deal in 2021 that would have valued it at $9 billion, and it even filed confidentially for an IPO earlier in 2024 before opting for a traditional listing. The sheer determination to finally enter the public market, and doing so with such resounding success, signifies a major turning point not just for Circle, but for the entire digital finance landscape, which has endured what many have termed as a crypto winter and a general IPO drought. Circle's debut is indeed one of the largest VC-backed IPOs since December 2021, excluding companies with minimal venture capital backing like CoreWeave, positioning it as a significant market event for the year. At its core, Circle is a digital currency services company, most notably known as the issuer of the USDC stablecoin, and it also offers the EURC, a euro-denominated stablecoin. For those unfamiliar, stablecoins are a fascinating innovation within the cryptocurrency world. They're designed to maintain a stable value, typically by being pegged to a traditional fiat currency, such as the US dollar, to facilitate secure and efficient digital transactions without the volatility often associated with other cryptocurrencies. In Circle's case, USDC is backed by highly liquid reserves, primarily consisting of US Treasuries and cash equivalents. A significant portion of those reserves, approximately 85%, is held in a government money market fund managed by BlackRock, a testament to the institutional backing and transparent approach Circle adopts. As of March 31st, 2025, USDC boasted a substantial presence with $60.1 billion in circulation across 4.9 million wallets. More recent data indicates its circulation is around $61 billion, with its reserve fund, managed by BlackRock, holding $53.3 billion as of May 29th. USDC stands as the second largest stablecoin by market capitalization, trailing only Tether. And it holds a significant market share, roughly 29% as of late March 2025, according to CoinMarketCap, or 24.5% by CoinGecko data. What truly differentiates Circle in the often turbulent cryptocurrency market is its regulation-first philosophy. This commitment to compliance and transparency sets it apart from some competitors, such as the El Salvador-based stablecoin issuer Tether. Circle received a New York BitLicense back in 2015, establishing its reputation as one of the most compliance-forward players in the digital asset space. This focus on regulatory adherence and transparent operations has been crucial in building trust with investors and regulators alike. It's a strategic choice that positions Circle not merely as a crypto company, but as a potential foundational financial utility layer for the internet, aiming to bridge the traditional financial system with the burgeoning digital one by addressing existing inefficiencies through blockchain networks. Beyond its core stablecoin issuance, Circle offers a comprehensive suite of services designed to support businesses and developers in integrating digital currencies into their operations. These services include application programming interfaces, or APIs, that enable the acceptance and processing of USDC transactions, alongside robust infrastructure solutions for managing digital assets. Furthermore, Circle provides a programmable Web3 wallet platform, which simplifies user interactions with blockchain-based assets, thereby seeking to enhance the broader adoption of decentralized finance, or DeFi. This diversified offering positions Circle as a key enabler for the future of digital commerce and financial services, moving beyond just being a stablecoin provider to becoming a critical piece of the underlying financial infrastructure. From a financial perspective, Circle has demonstrated its profitability, a key factor that likely resonated positively with investors during its IPO process. In fiscal year 2024, the company reported a net income of $156 million on $1.68 billion in revenue and reserve income. While this represented a decrease from its 2023 net income of $268 million, it still showcases a healthy operational foundation. Looking at a more recent snapshot, Circle posted a profit of $65 million for the first 3 months ending March 31, 2025, an increase from $49 million during the same period in 2024. The proceeds from this significant IPO are strategically earmarked by Circle to support its continued growth, enhance its compliance efforts, and fuel further product development. The company has also stated that it has no current plans to pay dividends to shareholders, intending instead to retain all available funds to reinvest in the expansion and development of its business. The success of Circle's IPO is inextricably linked to the strong backing it received from major institutional players. Notably, Ark Investment Management had indicated interest in purchasing $150 million of the IPO shares, representing approximately 14% of the deal. Even more significantly, BlackRock, which already manages a substantial portion of USDC's reserves, reportedly planned to acquire around 10% of the IPO shares. The involvement of such prominent financial firms signals a burgeoning confidence in stablecoin infrastructure and the broader digital asset ecosystem from traditional finance. This strong institutional demand was a primary driver behind the offering being upsized twice and ultimately priced above the initial range. While traditional retail investors may find it harder to connect with Circle due to its perceived lower volatility or meme potential compared to other cryptocurrencies or platforms like Coinbase, its positioning as a boring is beautiful trade for institutions seeking crypto exposure without significant balance sheet risk proved highly attractive. This highlights a growing sophistication in how institutional capital is engaging with the crypto market. The timing of Circle's IPO also benefited from a visibly improving regulatory environment for cryptocurrency and stablecoins in the United States. There has been a palpable shift in tone from the Trump administration, which has shown a significantly more accommodating stance towards the sector compared to the previous administration. This change in political winds has been accompanied by practical steps from key U.S. banking regulators, including the Federal Deposit Insurance Commission, or FDIC, and the Federal Reserve. These bodies have notably withdrawn previous restrictive statements on crypto assets, effectively granting banks greater latitude to engage with crypto assets without requiring prior approval. This regulatory clarity and increased freedom for financial institutions have created larger opportunities for businesses and cryptocurrency exchanges to operate within the U.S., paving a smoother path for companies like Circle to go public. Furthermore, specific legislative efforts, such as the Genius Act, which recently advanced in the Senate, aim to bring formal oversight to stablecoin issuers, potentially expanding the role of USDC in digital finance and providing a clearer operational framework. Circle's public debut is also part of a larger trend of crypto-linked companies seeking entry into public markets after a period of relative quiet. It follows closely on the heels of eToro, another VC-backed fintech with a crypto angle, which also completed its IPO on the NASDAQ last month, seeing a significant pop on its first day of trading. Beyond eToro, other prominent crypto firms such as crypto exchange Kraken and crypto custody services firm BitGo are reportedly considering their own public offerings later this year. This wave of listings underscores a renewed investor appetite and confidence in the long-term viability and growth of the digital asset industry, with Coinbase's 2021 NASDAQ debut serving as a foundational precedent for major crypto firms going public in the US. The market seems to be drawing a distinction, with institutional demand gravitating toward stablecoins, infrastructure providers, and exchanges, rather than speculative single cryptocurrency investments that lack a benchmark tie-in to traditional assets like the US dollar. The valuation achieved by Circle in its IPO further cements its strong market position. Based on outstanding shares, the company's valuation at $31 per share is approximately $6.9 billion. When considering a fully diluted basis, which includes stock options, restricted share units, and warrants, Circle's valuation reaches an impressive $8.1 billion. This figure exceeded recent expectations and the $7.7 billion valuation at which the company last raised funding in 2022. The leadership of Circle has been instrumental in navigating these complex waters. The company was co-founded in 2013 by internet entrepreneurs Jeremy Allaire and Sean Neville, although Neville stepped down as co-CEO in 2019, leaving Allaire as the sole chief executive. Allaire himself is selling a portion of his shares in the IPO, approximately 1.58 million shares, and will retain a significant 23.7% voting stake in the company after the offering is completed, demonstrating his continued commitment to Circle's future. In conclusion, Circle's successful IPO on the NYSE under the symbol CRCL is far more than just a fundraising event for a single company. It represents a significant milestone for the stablecoin industry and a broader validation of digital finance within traditional markets. By embracing transparency, a regulation-first approach, and securing strong institutional backing, Circle has positioned itself as a bridge between the existing financial system and the emerging blockchain-powered economy. This debut injects fresh momentum into the IPO market and highlights the growing confidence in crypto-linked listings, signaling a new chapter for the adoption and integration of digital currencies into mainstream finance. It truly is an exciting time to be observing the intersection of technology and finance, and Circle's IPO is undeniably one of the defining moments of this transformation. Thank you for tuning in to Financial Podcast. We'll continue to keep a close eye on these developments and bring you the most relevant and insightful analysis. Until next time, take care.